What's up, you guys? I'm Dan, this is Frugal Not Cheap, and today we'll be looking at my tax strategy for 2022. So recently, my payroll processor at my employer made available our digital W-2s for 2021. So this is always a fun time for me. I generally hate paperwork, but for some weird reason, maybe because it's finance paperwork, I actually really enjoy doing my taxes. A lot of options out there. I use something called Free Tax USA, not sponsored, just what I use because it's cheap. Used to use TaxAct, and before that I used TurboTax as well. All pretty similar, but I'm happy with Free Tax USA since it's completely free, especially because I don't have any state taxes to file here in the state of Texas, and I also for a long time didn't have any to file in the state of New Hampshire. Anyway, why though am I talking about my 2022 taxes when everybody is looking at doing their 2021 tax filings? The reason is that when you want to do tax strategy, it's not something that you want to do after the year is already gone. It's something that you want to do best before the year even begins or early in the year. Now, before we go any further, I would like to point out that the US tax code is quite complicated and that your personal situation might be very different from mine, so please do your own research and consult a tax professional. My situation is actually really simple. I basically got the W-2 wage income from my employer, and then I have a few 1099s, a 1099 int from an online high yield savings account that I have with Ally, and then I get 1099 divs from from Vanguard and from Charles Schwab that have all of my dividend income and capital gains and all that kind of stuff. So what's my strategy for the 2022 tax year? Well, really there are three main parts. One will be to take advantage of a welcome increase in 401k contribution limits. Second, I'll continue to max out my IRA. And three, I'll be working to get a small but positive refund. First, the good news. For 2022, the 401k contribution limits have been increased. Every now and then, the IRS does an adjustment to factor in cost of living, and they bump up the maximum allowable contribution for that year. And yep, when we say cost of living, we're talking about inflation. Now, in the year 2022, we could contribute a maximum of $19,500 for your regular 401k. And now in 2022, that has been increased to $20,500. Now, if you're lucky to be employed by your own business, you might have a solo 401k. In that case, combining the employer contributions and the employee deferrals, you can have a total of $61,000 that you could put away in a 401k. And that's an increase of $3,000 from last year. Now, all the numbers I've given you so far are for people aged 50 and under. If you're older than that, then of course you are allowed to put a little bit more due to catch-up contributions. Now, given that I have a very good retirement account 401k through Vanguard from my work, then it would be silly of me not to take advantage of that 401k plan and the tax advantage space. If you've got a 401k plan with really high fee structure, then it might be less attractive. Now, my employer offers both a Roth 401k and a traditional 401k, but I contribute fully to the traditional 401k. In theory, what that means is I don't pay taxes on the income now, but I would pay taxes when I take the money out of the 401k later in retirement. In practice, however, and this is outlined in my Roth conversion ladder video, I'll end up paying a very low tax rate on this income overall of only maybe 2 or 3% in early retirement. So again, immediately the benefit of using a traditional 401k is apparent because I'll be able to invest an additional $1,000 this year. But since I'm in the 24% bracket, I won't have to pay the 24% tax rate on that $1,000 of income. In other words, I'll save $240 on taxes. So in a sense, I'm really only spending $740 in order to put $1,000 into my 401k. Now, the thing with all this tax advantage space is you have the ability to put money into those accounts for that tax year, but once that deadline is passed, then you've missed out on an opportunity. So it really does make sense to try to take advantage of tax advantaged investment space whenever possible and whenever applicable for your situation. Now, in this case with the 401k, of course, we can't make contributions to the 401k after the year is over. So this is definitely one that we want to look at the beginning of the year and set up this plan for the rest of the year. So before the year even began, I reached out to sort of my HR and told them, hey, let's max out the 401k to the new limit of $20,500. Now, the next prong of my tax strategy for 2022 is to continue to max out my IRA. Now, unfortunately, there was not a cost of living increase to IRA contribution limits. Those remain at $6,000 for the year for individuals 50 and younger. But hopefully we'll get an adjustment next year. Anyway, I'm using a Roth IRA, not the traditional IRA, because I'm beyond the phased-out limit, so champagne problems. Now, because we've paid taxes on the money that we're contributing to a Roth IRA now, then of course the trade-off is that then we're able to have that money grow tax-free and be able to withdraw it tax-free later on, and it's also not subject to any required minimum distributions. If you don't know what required minimum distributions are, well, if you've saved too much, they can kind of become a problem. At a certain age, now it's in your 70s, the IRS, well, basically, you have to start taking out a required minimum amount out of your IRAs. And if this is out of those traditional IRAs, which are the ones that are subject to these RMDs, then of course there are going to be some tax implications. So this can be an important factor to consider in your long-term strategy. Now, the nice thing about the IRA contributions, though, is you do have more time. So for the tax year 2022, you can make contributions for the prior tax year up through April 1st. So, even in January of 2023, I could be looking at figuring out, what I want to contribute to my Roth or my traditional IRA. But generally what I do is just set up my weekly payroll such that at the end of the 52 weeks, then I will have maxed out the $6,000, and that's my plan for 2022. All right, and finally, the third prong of my 2022 tax strategy is that I've set things up so that we'll have a small but positive refund when I go to file in 2023. See, I know that I'm going to have some investment and interest income. Again, I have that high yield savings account from Ally that has my emergency fund. That's just about 2 months or so of expenses. And then I have a little bit of a buffer in my checking account as well. Altogether, we have about 3 months worth of expenses there. Then I'll also be getting a 1099 div with some dividend income from my brokerage account. And if I don't have the opportunity to do any tax loss harvesting this year, then that will add an additional tax burden that I will have needed to account for. So in order not to end up owing any money to the IRS, I did increase my withholdings a little bit, just enough to offset my projected dividend income. So you might have two questions about this. So first, why not owe the IRS? Well, at some point, if you owe the IRS enough, then they will want you to have made some estimated tax payments. And I don't want to end up in that kind of a situation. The other question you might ask is why not set things up to get a larger refund? Everyone out there in the popular media seems to talk about tax refunds as if they're some great thing. In my opinion, they're pretty dumb, right? Think about it. It's a refund. So you're getting your own money back. And in some cases, this could be money that you had withheld back in January. So they've held onto your money for over a year by the time that you get it back, when it could have been working for you instead. So, in other words, I would much prefer to have a small but positive tax refund, but certainly nothing too big, because then I'll be upset that the IRS had my money that whole time and they're not paying me any interest. Another way to think about this is that for many people, a tax refund is kind of forced savings, right? In much the same way that, equity in a house is a really good way of forced savings for a lot of people as well. But hopefully you watchers of this channel, Frugal Not Cheap, are sort of ahead of the curve a little bit, maybe smarter than the average bear, or more disciplined anyway. And so we don't need to do these kinds of shenanigans. We can really optimize and see what's best for us after we run the math. So that's my plan for 2022. Pretty simple. Happy New Year, by the way. I hope you have a wonderful year this year, 2022. Certainly doesn't have a huge bar to pass to improve over 2021 and 2020. Anyway, thanks for watching. If you enjoyed the video, please hit the like button and consider subscribing. Thanks again, and I'll see you in the next video.